Our coverage of the World Economic Forum in Davos continues. Let's head over to Brian Sozzi and Julie Hyman in Switzerland.
Thanks, Sean and Dave. We caught up with EY Global Chairman and CEO Carmine Sibio, and of course asked him his top takeaways from the World Economic Forum.
You know, I have to tell you, I came here, I thought there was going to be complete pessimism everywhere. And I'm surprised that's not the case. I'm not saying there's a lot of optimism, but it's much more balanced. I think people are looking at, we will have some kind of downturn in the U.S. and Europe. How long it'll last? Will it be shallow? There's more of a sense that it's going to be short and shallow right now. And I think there's a few factors there. One is all around curbing inflation. And what is that going to take? And are the central banks all going to make the right moves? And my own view is I think they started too late in terms of increasing rates, but now they're at a point where they can really make a difference here. On that point, though, I do think the labor market's part of the equation here in terms of where inflation really is. And I think there's a lot of headlines around people, being let go and so forth. But you really have to look at how many people were hired by those companies in the last 12, 18 months. And the people that are being let go is a small fraction of that. So the labor market we see is still tight. I think the Fed's going to weigh that in terms of what they do. But I think the timing on that's going to be important. And the other part is geopolitics. And if we can have some kind of resolution to the Russia-Ukraine situation sooner than later, I think that will be a big pop in the market, in Europe in particular, around energy and food, but also just psychologically. So I think those two factors will determine how quickly we kind of come out of any kind of downturn.
It's interesting that you talk about the job market. We were just talking to the CFO of ServiceNow, who was talking about hiring some of the people maybe who are being laid off from elsewhere. And we've also heard the theme that the layoffs are not sort of across the board, right? They're in pockets of areas. What are you seeing on that front? And do you think that we are going to see unemployment climb to as high perhaps as the Fed is predicting? Or do you think it's not going to be maybe as bad?
I don't think it's going to be as bad. I do think some of these firings are in pockets. I do think some companies have overhired for sure. And I think most companies are just looking at lower performers and so forth and doing the type of house cleaning that they should be doing anyway. All that being said, I think labor in most of the developed markets in the U.S. and Europe is an issue, and it's a long-term demographical issue. There are just not enough people, the amount of jobs that are needed. And it's ironic because we were here in Davos 4 or 5 years ago saying that technology is going to take away all these jobs and so forth. The reality is technology is creating different jobs, and also it's not coming to fruition fast enough in terms of taking away jobs. And I think demographics are an issue when it comes to labor as we go forward.
We've had a lot of conversations so far at Davos about artificial intelligence, and it feels like this is the first WEF where artificial intelligence, the next generation, is very much out in front. I mean, do you view AI, what this is coming next, as a potential job killer?
Yeah, look, AI will take place, it will replace some jobs, no doubt about it, but it'll also create different types of jobs. And so I do think the next generation of AI will be better and better, but I still think we're not there yet. I still think we're not there yet. And you got to remember, AI, to program anything for any kind of artificial, learning and so forth, it takes time. A machine takes time to learn as well. It's not like on day one it knows everything. It has a lot of factual data, but it's going to have to go through scenarios and so forth to really learn. So that's going to take time, and I think that's the time period we're in right now.
I want to ask about your company specifically, because you guys are undergoing a transformation at the same time that the economy is undergoing a bit of a transformation. Just give us a status report and tell us what's going on.
Yeah, so at EY, we are and have been looking at separating the company, separating into EY into two companies, what we're calling a shortco, which will retain the EY name. That'll be the audit company. That'll be about a $20 billion organization globally in 150 countries in a partnership form the way we are today. And then NewCo will have a separate name, separate brand, new brand. That'll probably be, by the time we do the transaction, probably be close to $30 billion in revenue. That company will be exciting. It'll do everything from strategy consulting transactions, everything around a transaction, tax. It'll be one of the biggest tax practices in the world, law as well. And then it'll also do business consulting, technology consulting, and outsourcing. So it'll be a platform that it'll enable it to grow in a lot of different directions, and it won't be conflicted. It won't have the conflicts in terms of what's happening today. So that's where we are. It's not only us that are looking at this. Many of our clients are looking at splits and looking at how do they create value today, and we're actually working with many of them.
Can you just quickly tell us what the latest timeline is?
Sure, the timeline. So for us to do this, it requires partner votes from around the world. Those votes will occur in the March-April timeframe. We will then look to operate separately, but still as part of EY, within EY, for a period of time, probably starting in the summer. And then the transaction would probably occur either in the fourth quarter of 23 or the first quarter of 24. So, we're not doing the transaction today, so today's environment doesn't really matter. It's going to depend on where are we basically a year from now. And hopefully we'll be in a different place and out of any kind of downturn.
So, Julie, another CEO that says the world isn't ending, but it necessarily isn't that great in terms of the economic outlook.
Yeah, not a terrible amount of doom and gloom necessarily, but caution. Caution, I think, was the name of the game. Back to you guys.